Welcome to the Mortgages Made Easy podcast. We're sitting here today with Jennifer Jacobus, who is an attorney, and she specializes in tax appeals in New Jersey. So, Jennifer, just tell us what that means and what that's all about.
So if you own property in New Jersey or pay the taxes for property in New Jersey and have an agreement with your landlord that you pay the taxes, you have a right to appeal the property taxes paid to your local municipality. And every municipality has an individual tax rate and an individual ratio. So each individual property is really a separate evaluation as to whether there's a good case for appeal and whether, based on the market data, you are being taxed too high relative to the individual property's market value. One key thing to note is that the value date for a property tax appeal is always October 1st of the prior year. So right now we are in the 2023 property tax appeal season. The value date for 2023 appeals is October 1st of 2022. And the value time frame, basically the market data that you would use, is October 1st of 21 to October 1st of 22. And there are, I would say, one of the key things to keep in mind are deadlines, because there are different deadlines for different property tax appeals that you would file. So the deadline for Monmouth, Gloucester, and Burlington counties, if your assessment is 1 million or less, is actually January 15th. So those people would have to look into a 24 appeal at this point if they missed the deadline. Mm-hmm. For pretty much everybody else, it's usually April 1st. A lot of people confuse it with the 15th with the IRS tax deadline, but it actually is April 1st. And if you miss it literally by an hour, the filing deadline, you're finished for the year. So you want to be sure to keep the April 1st deadline in mind. One exception is if your property underwent a revaluation or reassessment and is not in those three other counties, the filing deadline is actually usually extended to May 1st because they need a little bit more time to get everything in because they went and reset all the assessments in town.
Got it.
So that, deadlines are the key thing to remember. And then, you can always, have some time to look into it.
And you said those are for properties under $1 million. Are there different deadlines for properties over $1 million?
So if you're in those three counties, Gloucester, Monmouth, and Burlington, and over $1 million, you have that regular April 1st deadline like everybody else. However, you can elect to file if your assessment is over $1 million at the state tax court or at the county board of taxation. They're just two different authorities that would hear your property tax appeal. I usually recommend trying to do the county board of taxation because it's a faster process. So they basically hear all of the appeals for the most part by the end of the summer. There are exceptions, during COVID and the pandemic, what happened was it actually extended in some cases all the way through to December because, there was such a delay. They actually extended the filing deadline that year. So they extended the hearings into December, but generally you get a much faster turnaround at the county board of taxation. So, I usually recommend filing there because if you're not happy with the decision of the county board, you still can take it up to tax court. But if you go directly to tax court, it gives you more freedom in terms of back and forth with the assessor, what evidence you want to submit, but it can take a very long time, in some cases years.
Now, I bet you have stories. I love that smile. I bet you have stories. Tell us about someone who you've worked with who saved some money by appealing their taxes.
I would say there are a couple demonstrative examples. I actually got a question today from another attorney, actually, and they were asking, well, because an individual property owner can file an appeal on their own as long as the property isn't in an LLC or a company. And she was asking me, why do I use you instead of just filing on my own? And I would say there are a lot of benefits you get with hiring, not just me in particular, but with an attorney. And a lot of times, to put it in context, I say it's like painting a house. You know, you can get a bucket of paint and paint your own house, but it doesn't necessarily turn out the way you might hope it will turn out if you handle it on your own. And the reason is, you know, if you hire a professional, you get the benefit of their knowledge, their experience, their expertise, their relationships. You know, having been in this practice area, you know, for well over a decade, I've built relationships with the attorneys on the other side, with the tax assessors on the other side. I've dealt with all sorts of, you know, different challenges that come up in an appeal, limitations on available evidence, and you have to, you know, kind of be creative with the arguments you are going to make. You know, obviously, market data is the best evidence you can have if you have an appraisal report, if you have comparable sales evidence. But sometimes those things aren't there. Sometimes you have to request an inspection and let the assessor see, you know, the condition of a property. You know, there are all different ways kind of to attack you know, the evidence issue with a property tax appeal. And sometimes you need to get creative if the evidence isn't there. So that's where, you know, the experience of an attorney can really help you. They know the deadlines, they know the evidentiary rules. They make sure that you're not making the wrong argument. You know, sometimes I get the argument from many taxpayers, well, my neighbor has the same property as me and is paying half the amount of taxes. And for purposes of an appeal, that's actually irrelevant, which is shocking to many people. But the county board and the state tax court are concerned with market value. So they're concerned with recent sales that show what the market value is and not what other people's assessments are. There could be someone who is paying the same taxes as you, has, you know, twice the size or twice the value home. And it could just be there hasn't been a valuation of the town in a long time, and things are, you know, skewed and not in your favor. But that doesn't help the person who wants to appeal. You need to prove with market value evidence that you are overvalued. So that is the key.
So, you know, boy, in northern New Jersey, there are just so many towns where the taxes are higher, crazy high. You know, if somebody has, let's say, $20,000 in real estate tax bill, how much do you think they could save? I mean, what's a good story?
So it's very individualized. I will tell you that so there are many people that don't realize they're overpaying. And actually, it is interesting to note that before I got into this practice area, I purchased my own home. And at the time, my town hadn't undergone a revaluation in many years. And we actually thought we were paying a fair amount for our taxes. The number didn't seem crazy high. And the assessment, you know, was definitely lower than the price we paid. The problem was that the implied value of the assessment was actually well over what it should have been. And I didn't know that because I didn't know property tax appeals at the time. That was still when I was doing general litigation and I hadn't practiced in this area yet. You can't just look at the number on the card. You need, you know, and sometimes expertise if you don't want to learn it on your own. There's a calculation to determine whether you are overassessed or not. And the tax assessor has a right to be up to 15% incorrect in the assessment, depending on what the ratio is in your town. So it is a very specific calculation individual to the property. One of my first clients was a unit in Hoboken, and it was at a time when the assessments were not equal to market value. There was a big ratio. And my client didn't realize that she was overassessed until she had reached out to me on the recommendation of her friend. And when I did the analysis, they were paying double the taxes that they should have been. And in that case, we were able to get them cut in half. Now, that's not the standard story, because many times it may be that, you know, somebody is 17% overassessed or 20% overassessed. It's not usually half, you know, or paying twice as much. But there are cases where that is the scenario. And that's why I always recommend looking into it every year for people that own property, because, you know, our consultation is free. There's no charge for us to review to see whether you have a good case for appeal. And there's a certain comfort in knowing, even if, you know, you don't have a case, that you're paying your fair share of property taxes. And then, you know, if there does happen to be a case for appeal, the way that myself and many attorneys in this business set it up is we have clients pay the filing fees up front, which are determined by the county board and the tax court, and they don't pay anything else unless we successfully reduce the taxes. It's a contingency fee. So a lot of people like that deal because they're not taking a huge risk by paying the filing fees. And we do let people know if we think it'll make their case much, much stronger if they buy an appraisal report. But a lot of times we are able to file a case and successfully reduce an assessment without spending more money than the filing fee.
Mm. So you said something interesting that I wasn't really keyed in on, and that is, let's say I buy a house in Bergen County for $750,000. The assessment may be $500,000, and I'm still paying way too much in property taxes.
Correct.
Can you explain that again?
If it is a situation where the assessment is 500,000 and let's say the ratio in the town is 50%, you know, it could be that, you know, the value of that property is well over $1 million. And that's the taxed value. So that's not what the market says. That's what the assessor says is your taxed market value. Doesn't mean it's right. It just means that that's what you're being taxed at. So if it's a case where you paid $750,000 for a home that's, you know, well assessed well over $1 million, then that is a good case for appeal.
Right. And so walk us through the process, please. I call you up and I say, Jennifer, I think my house is overtaxed. What happens?
So the first thing I'll do is ask some questions, both whether there has been a recent sale. So a lot of times, even if there's a recent sale of a property, it takes a little bit of time for the county clerk to get those deeds into the tax records. So we don't want to just pull a tax record. We want to get some information from the people that call in to us. So we'll ask if the property has been listed, which is relevant. If it's listed for a certain value and not selling, that can be relevant evidence of what the value is, although not definitive evidence. If it is a situation where it's a recent purchase, that can be very relevant to determining value. In fact, it's usually pretty determinative unless it's what's called a non-usable sale for tax appeal purposes, which means that if a property is purchased during a short sale, a foreclosure, an estate sale, a divorce sale, all these other sales that might have pressure on the sellers to sell for less than fair market value, you have to look sometimes to external factors. So, you know, you might have a sale where there are one of those distress factors, but then you have an appraisal report that shows maybe either they paid a fair price or that the price they paid is still too, or it still renders the assessment too high relative to what they paid. And so, you know, if you have a realtor involved, a lot of times a CMA, comparative market analysis, will show what the value is. So all of those things are relevant. One thing that you would deal with as a mortgage broker is many times a property owner gets an appraisal in connection with the funding. And that can be indicative of whether or not it is overvalued. So I'll ask if there are any of these relevant pieces of information out there, whether there have been any renovations recently, what the condition of the property is. You know, I have had cases where it turns out there was a fire destroying the building for the property. And you actually still need to appeal that to lower the taxes, or they will continue to charge you for the building if it is not an annual reassessment town. So you want to get all those pieces of information first, and then all review to see if it looks like, relative to sales in the area, relative to any list prices and things like that, that whether it looks like it may be overvalued. And, if it's borderline, I'll let a taxpayer know that. Sometimes they have very strong opinions of what the value of their property actually is.
Mhm.
And sometimes I actually get a very honest, oh, I could definitely sell my property for more than that. And then, it doesn't make sense to appeal it. So, but we want to look at all of those factors. We want to apply the ratio in the town, determine what that 15% upper limit is that we have to prove below to win an appeal, and then see where things stand relative to the market value of that individual property and whether it makes sense to appeal.
Now, is there a deadline for this?
So we take cases all year long. So even if, let's say, I had a past client of mine, and we actually do send email blast reminders at the end of every year to let people know the deadlines are approaching. But sometimes we have clients that miss the deadline. I had a client that called me about a January 15th deadline property about a week ago. So he missed the deadline, but we're reviewing it for a 24 appeal. And while the deadlines, are out there, or, very far ahead, it makes sense to get the ball rolling so that you don't miss it again. I have had clients that reached out, and we told them the deadline, and, life gets away from you and they end up missing it by, let's say, a week. And you want to make sure that you file an appeal in a year that you have a good case for appeal, because the ratios change every year. One story that I can tell you on both sides is I've had situations where a homeowner had a good case for appeal in one year, and the very next year the ratios changed such that they did not have a good case for appeal, and they lost out for a while on their chance to appeal based on market value. And I had another one where I told the taxpayer, look, you are just inside that 15% corridor of an acceptable assessment, but reach out next year because things might change in your favor. And they did. And the sale was still recent enough at that time that we were able to successfully appeal the following year.
Mm. And so for most of the state, it's April 1st that you have to file by?
Correct. That is the most common deadline.
Okay. So therefore, if I have a home, it's, January 31st as we're conducting this call, but if I have a home and I think it's overassessed, I should really move quickly to reach out to you because there's a April 1st filing deadline.
Correct. So right now is a time when we get a lot of inquiries. You definitely don't want to miss the deadline because April 1st and May 1st are fast approaching. You do get a trigger every year for when you should be following up. You are supposed to get a notice of assessment card in the mail. I have an example to show you, but it's, a little, like, almost 3x5 card, I think it is. And you get those in the mail, and it tells you what your assessment for the coming year is expected to be. If your town isn't undergoing a revaluation or reassessment, it's usually the same as last year, unless you made changes to your property that warranted a bump up in the assessment. So, this is the time when everyone gets those. And a lot of times that is what triggers my potential clients to reach out and see if there's a case for appeal. That's not to say if you don't get this card in the mail, now is the time to reach out to your tax assessor and find out what your assessment is for the year. Because if it doesn't get to you, they are not responsible for that. You still have the same deadline as everybody else, even if it gets lost in the mail. So you have the onus of making sure that you know what your property taxes are for the year. One other deadline that I will mention is if you get an added assessment, you can get one later in the year. So that is, over and above what you started with for the year, you can get an added assessment at the end of the year that's either prorated for the number of months that you had whatever improvement it was, and it can go back as much as 2 years if the assessor missed something and forgot to add it on. It's called an omitted assessment. The deadline for those is actually December 1st. So at the end of the year, if you get some notice in the mail that talks about an increase, it's not the regular deadline, and you have to be aware that that is actually a December 1st deadline. And those aren't as common. Usually an assessor will start a new assessment at the beginning of the year, but if they recognize it and capture it, toward the end of the year, you may receive a notice in the mail in that regard.
Jennifer, what's your superpower?
I would say the relationships that I have built with all of the assessors and attorneys who practice in this area. You'd be shocked, but I get an awful lot of referrals from attorneys on the other side because I've built good relationships with them. They think I deal with them fairly and it's reciprocated. And, it's a very friendly practice area. And I think the other attorneys and the assessors appreciate the professionalism, the responsiveness. Sometimes they might get annoyed at the amount of times I follow up because I do try to get things resolved as quickly as possible and not have things sit around. But I would say the relationships that I've built, I think, have resulted in a large amount of tax savings for my clients. And so that feels good to me because I'm able to, provide a benefit. I've gotten letters of appreciation that are just, amazing to read, and, you're doing some good in the world, but it's very rewarding to be able to help someone in this way.
And it's almost free, right? Because you said other than the filing fees, everything else is paid on a contingent basis.
You will either get a refund by check, or in many cases, if you file at the county board, they actually do a credit toward your third and or fourth quarter tax bill. So it's money you wouldn't have had. So if you get, let's say, a credit for $3,000 in the fourth quarter, then you pay the, let's say, $1,500 of that to me out of, what you saved because of the work we did. So the contingency fee sometimes varies for commercial properties. We usually do 40% instead of 50%. Standard fee for residential is 50% of the savings. And the way we term it is settlements negotiated in settlement of the appeal. So it's sometimes assessors like to do a going forward reduction. So you might see a further reduction in the following year. You might see the whole reduction start in the next year if that's the settlement you negotiate. And sometimes, you get a better deal that way, if you can believe it, because the assessor, likes to do going forward so it's not affecting the current year budget. And they might be a little more generous with the number. And then, if you're having a reduction that carries forward every year, you don't necessarily care as much about a single year if you're getting much more savings by starting it the next year. So sometimes it does work to your benefit to do that.
And then obviously working with someone like yourself, you bring the professional judgment to the table to advise people as to how they end up better off.
Yes. Sometimes, for example, there are certain things that you shouldn't bring up or that you should bring up. And it really varies sometimes based on the assessor. Some assessors like certain types of evidence, other assessors like other types of evidence. I will tell you, there are certain towns where I won't take a case unless a taxpayer gets an appraisal report, because it'll be a waste of my time and their time, because in my experience, the assessor will very rarely settle without one. And then there are other circumstances where I know that if there's a recent sale, let's say, that the taxpayer won't need an independent appraisal report with that assessor, because that assessor, gives a lot of weight, let's say, to subject sales in that town. and, you know, after they investigate and confirm it's a good sale, doesn't necessarily require an independent appraisal report. So it really is tailor-made based on not only my experience across the board, but with individual assessors. You know, a lot of them are assessors in multiple towns, so you come across
Really?
them in many different circumstances. And, you know, in their travels, you know, I've met them, you know, in one place or another. There are some assessors that used to work for revaluation companies that we've dealt with and then leave those and get independent tax assessing jobs. So there's a lot of relationships that you are able to build that last a number of years, because there are so many people that stay in the field in different ways for a long time.
Mm-hmm. And so just to cycle back for a quick minute, what are the filing fees usually? What does it cost to file it?
Sure. So it actually is based on your assessed value if you're at the county board level. So if you have an assessment under 150,000, it's actually just a $5 filing fee. And then if you have one of the, I think about half of the counties now you can file online instead of paper, and those are an additional $5 generally. So, you know, it could be as little as $5 or $10. If your assessment is over $1 million, it's actually $150. And then, you know, sometimes the extra $5. So it's that range for the county board. For tax court, it actually depends on whether you're residential or commercial. If you have a residential or small claims commercial property or vacant land that's zoned residential, let's say, it's typically $50. But if you have an assessment that is commercial, and the taxes are more than 25,000 last year, it's actually $250. So that's the priciest one, but it's really never going to be more than $250, which, you know, when you're saving, you know, sometimes I get the question of, well, is it really worth it? Because, you know, if I'm saving 1,000 and giving you 500, and I say, you know, if you add up $1,000 over 10 years, you know, that's $10,000 that you're saving. So it usually ends up being worth it to invest in the process, because the savings you net year after year build up very quickly. So it usually is, you know, very worthwhile. And many times, even, for example, if it's a town that you need an appraisal report, sometimes that will be intimidating to people if they need to go get an appraisal report. But if you think about the money you can save, particularly, let's say you're 20%, you know, overpaying by 20% of your taxes, if you get that amount of reduction, almost in any home in New Jersey, that's an average tax bill of what, at least like maybe $8,000 to $10,000. That's, you know, average. You know, to save 20% on that every year is very substantial for almost any property owner in New Jersey. So, you know, the towns that undergo annual reassessment, I will add one caveat that they do have the right to adjust each year the assessments. But typically what happens in those cases is if they adjust the property downward based on the market, you might get tweaked a bit upwards or downwards based on the change from one year to the next, but the baseline has changed. So, you know, whereas you were askew, you know, the prior year, even if you go up or down based on the market, you're still kind of at that lower level before the adjustment, is what typically happens. So even in reassessment districts, it usually is worthwhile doing, because I think you do see the benefit not only for the current year, but going forward as well.
Fantastic. This has been great conversation. Tell me a little bit about yourself. What are you passionate about?
Sure. I have a 13-year-old son. My husband and I also have 2 toy poodles. So that leads to a very full schedule with basketball games and practices and all of that. But besides all of that going on, I would say, you know, I have a number of women working with me. And it is great to be able to all work as a team and be able to provide you know, the services that we do, really to all ends of the spectrum. You know, we have clients that have very low value properties that, let's say, have, you know, $100,000 condo to multi-million-dollar commercial and residential properties. So we help everybody across the board. And, you know, it's nice to be able to just be dealing with people in New Jersey. You know, I grew up in South Jersey in Cherry Hill, and I, a number of times, will deal with people down there. I'll get referrals from places all over New Jersey. And it's nice to maintain my contacts all over. So, you know, I actually have a friend who is recently became a realtor in this business. And, you know, it's nice to be able to kind of network and build the relationships, not only with my clients and the attorneys and the assessors, but also with, you know, friends that I've developed over the years. You know, you'd be surprised how interconnected all of the fields are. You know, so many brokers that we've met, or realtors, or you know, appraisers, and, you know, it's all interconnected. So we come across a lot of the same people, and I would say my favorite part of what I do is that it's very friendly. You know, the judges know us all very well. Many of them have been practicing for a very long time. And that is, I think, one of the best parts of the job.
And I think winning has probably got to be a
Oh,
fun
yes.
part as well.
Well, it's funny because I do get the question of, you know, what is your success rate? And people are surprised when I say, you know, we have a very high percentage of successful cases, but that's, you know, for mostly selfish reasons. It doesn't make sense for me or my clients to take cases that aren't winners, you know, because it's wasting my time and their time. You know, it's, you know, you certainly don't want to file appeals where, you know, you're not going to be successful. So it's, and it's disappointing. You know, I don't want to even waste a filing fee, even if that's the only risk of a potential client, when the evidence just isn't there. So.
Well, this has really been a privilege. We've been privileged to spend some time with Jennifer Jacobus. She's an attorney in private practice specializing in tax appeals in New Jersey. And we'll post her information up on in the chat below. If you've enjoyed this, please come on back. Let us know what you've enjoyed about it. And thank you so much, Jennifer, for spending your time.
Oh, thank you. This was fun.